I'm AJ Dasani from Ace Accountants and Merkle Sharp Accountants, your happy, smiley accountants. Today's the 23rd of November 2023, and as usual, I'm here the day after the Chancellor's autumn statement to give you a hopefully simple and concise summary as to what the changes are that affect our client base, small businesses, property owners, any hopefully relevant changes or things suggested or mooted yesterday. So I'll generally look at things I'm going to cover today are obviously a little general update, the impact it has on small businesses, the impact on employees, some R&D changes, and some other little bits and bobs that came to my attention. That's kind of really the main things I'm going to focus on. And like I said, obviously, just before, this is aimed at our client base, so there is lots of bits that I've missed out on purpose so that it's relevant for our clients that are watching and potential clients that might find it interesting. So in terms of a general update, obviously he spoke about inflation a lot, took a fair bit of credit for that, which is obviously up for discussion whether that's something the government has impacted or it's been the Monetary Policy Committee. I'll leave that with you to decide. And obviously the OBR, the Office of Budgetary Responsibility, has suggested that growth will be slightly higher based on the changes that he is looking to implement in the coming weeks, months, and year. So to start with small businesses, the first thing that jumps really to me is the fact that Class 2 national insurance, which is £3.45 a week at the moment, will be abolished entirely, which is fantastic. It was just a pain really, so and it was just a really random small amount, had historical impact, but I thought sort of recently didn't really have much. So I'm quite like that, if I'm honest. Monetary impact, about £200 a year, will be saved by quite a fair few small businesses. Second, most small businesses know that they also pay Class 4 national insurance, and that is at 9% right now, and that will be cut to 8%. Next, the word used, full expensing of capital expenditure, that's being continued for the next 5 years. It's being made permanent in effect. That's an interesting one for me. I've discussed this a lot with clients, and a lot of you guys know my opinion on this is slightly mixed, because it works if the asset that you're buying you're going to keep until it in effect dies. Obviously it doesn't apply to vehicles, but in effect what it's saying is that if you buy plant and machinery, qualifying plant and machinery for your business, you get to claim the whole 100% in year one against your tax. But that's on the assumption that you don't sell it, because when you sell it, whatever you then sell it for gets clawed back. So just bear that in mind. It's not as if you can buy something for £10,000, expense it, and the following year sell it for 9 and there's no impact. That would be unfair. Next, the 75% business rates discount on retail, hospitality and leisure has been extended, so that's fantastic. And the small business multiplier has been frozen, so I think that's fantastic for our clients that are on the high street. From an employee's perspective, a couple of fairly decent changes as far as I'd say. The national living wage has gone from £10.42 to £11.44, quite a big change. Yeah, it's very, very welcome as well, given the cost of living crisis. And the employees' national insurance rate, which at the moment is 12%, has gone down to 10%. But interestingly, that's coming in from the 6th of January 2024, so in a couple of months' time, which is fantastic. It's a good planning point as well. But just bear in mind that obviously this is the same Chancellor that a year and a half ago implemented the Health and Social Care Levy, which was 1.5%. So it's kind of just reduced something that was there, just with a different name. And obviously bear in mind that tax-free thresholds and the income tax thresholds remain the same. So from an inflation perspective, I'm not quite sure what the net impact of all this will be. I've obviously not sat there and calculated it, but it kind of feels like robbing Peter to pay Paul slightly, especially with the Health and Social Care Levy that came in last year. So that's my kind of thoughts on that bit. Next, looking at R&D tax credit. As you guys know, it's not an area that we look to assist with, but it's relevant for a fair few of our clients. What they've looked to do, I mean, this is something that for me is a bit of a pain point, if I'm honest. I think the R&D, the whole system is kind of skewed in favour of larger companies, because for small companies it's very, very difficult to claim. There's a lot of hoops to go through, and there's just a hell of a lot of rigmarole. So what it's being mooted is the fact that already there was a reduction in the claim value for many SMEs. The credit rate was nearly halved this year to just over 18%. That will fall to 15% for profitable businesses, and it was just announced yesterday that credit will be slightly higher for loss makers at 16%. But for me, in short, it's just a system. I've read a few bits on this since yesterday, and most even larger firms of accountants tend to feel that this is just really skewed towards larger businesses. So it's something I think that has a lot of scope for improvement and would stimulate a lot of investment if it was done correctly. And just lastly, for some other changes, a few of our clients, one in particular, will really like this. He's committed to £50 million of spending and looking at how apprenticeships could be better. He's looking at an option of helping councils look into a speedy planning option, or giving clients their money back, which could be good, just speeding up the planning process for our clients that are into property development. And similarly, he's going to make it a lot easier to allow a house to be split into 2 flats. As far as I'm aware, that will sit in permitted development. Again, not my technical area of expertise, architects, but the idea, as far as I'm aware, from what he said, was that houses could be split into 2 flats as long as externally they remain the same. And there was just a small change that I did pick up, or a small suggestion, hopefully, that there'll be changes in how pension funds are administered. So if you join a new company, then hopefully you'll be allowed to not ask but mandate your employer to pay into your previous or your current pension scheme. So because there's a lot of people that end up with 3, 4, 5 little pensions dotted around, and they're kind of quite hard to track, and ostensibly a lot of the time if they could be merged into one big pension, then that would make life a lot easier. So I think that's quite a nice little change, if that indeed ends up being as is described. So as always, feel free to write, to question if there's anything that I haven't entirely made clear. Always happy to clarify. Put a comment, write a question, send us an email, give us a call. We're obviously more than happy to help. We look forward to helping you if we possibly can. So I'm AJ Dasani from Ace Accountants, your happy, smiley accountants, looking forward to helping you for a number of years to come.